Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, November 7th, 2022. Let's take a look at the charts. I'll start with the daily chart here just to remind you that was Wednesday of last week. The market settled back below this descending flag at the bottom of a move, this descending channel top today at 216.80. That was considered a failure to follow through on a 2 to 3 week buy signal. In essence, a valid sign of weakness over the 2 to 3 week time horizon. Now, following that sign of weakness, following that Wednesday sell signal, if you will, we have Thursday and Friday pushing through that area in a meaningful way, but we did not close back above it. So this maintains an on the defensive dynamic as we continue for the week itself, still maintaining a 2 to 3 week downside objective in this long-term support zone that is presently between 173.32 and 181.72. In this area, able to contain selling on a longer-term basis through the rest of the year and perhaps well into Q1 of next. And so that is the big picture. If we close back above 216.80, that does neutralize that sign of weakness, that 2 to 3 week sign of weakness, anticipating the 173, 181 area. And in fact, then the question becomes, will we turn back up and reclaim a 260s objective over the 2 to 3 week time horizon? And I would begin to lean in that direction, but really I wouldn't feel comfortable with that outlook until or unless on the weekly chart on Friday we close above the high of the low, which is an appreciable distance, of course, above 216.80. So it is a bit stair-step, as I've been saying. Closing the week Friday above 233.81, we then should push into the mid-260s within 2 to 3 weeks or less, where we could top out through the rest of the year and then fall off from the mid-260s. But I don't want to get into that just yet because, there's no point in doing so. We remain heavy. So let's take a look at I'll take a look at this chart here. There's a few things going on here. 216.80, of course, is our 3-star resistance for the week. We settled out at 207.47, so just above current price levels. I have an intraday resistance level, a pivot point at 210.51, below which 204.99 is likely today. Now, 204.99 is the low settlement price from several weeks ago, and we did break that on Friday. We got down to 203.08 and we came back, but 204.99 is still the level to buy ever so cautiously if you're an aggressive day trader on an intraday basis, on a daily basis. Holding above 204.99 will keep 216.80 in reach, perhaps within the day. And in fact, if we push or open today above 210.51, we should reach 216.80 on an intraday basis. That 216.80 formation able to contain weekly buying pressures, and once again below which the 173.32 to 181.72 area remains a 2 to 3 week objective. Now, we're just off this 204.99 area. And if we break or open today below 204.99, 197 even is likely within the day. And if we close today below 204.99, I do think that 181.72 area would be in reach today. And that is once again this band of channel support that remains a 2 to 3 week target below 216.80. So closing below 204.99 will probably this week test the significant zone of long-term support between 173.32 and 181.72. And this channel support can contain longer-term selling pressures through the rest of the year, possibly through Q1. It's probably better shown here on this weekly chart. The numbers are slightly off because it's a weekly bar chart, but it actually converges nicely over the next week or two. Actually, this week, just about, with 172.77, which is a 5/8 downside Fibonacci AB. A is the actual March 2020 COVID low, and that at the time was the most meaningful downside pullback that Tesla had incurred in its short life. And so I'm using that as a point to draw Fibonacci support levels from. The last remaining Fibonacci support is the 5/8 long-term at 172.77. So one of the reasons I'm really showing this is that it converges with this channel structure here. And I'm just underscoring the importance of that channel structure in its ability to contain longer-term selling pressures. As it turns out, 204.99 is also the low settlement price on the weekly chart. In other words, we closed on a Friday at 204.99 and came back the following Monday, as you recall. Let's talk upside today. I'll go back to this chart here. If we push or open today above 216.80, this former channel bottom, which is actually roughly contained buying pressures the last couple of days, would be in reach. 223.51. That could be it for the day. If we push through 223.51, 228.22 is likely. That is the high settlement price, able to contain daily buying pressures. But I will say that after all of this, closing above 216.80, that would be above the settlement prices also from Wednesday, Thursday of last week. That should mark a good weekly low. So if we close above 216.80, I do think 233.81 is likely within the week, which is once again the high of the low from a couple of weeks ago. And we could top out there for a couple of days. But closing above 216.80, I'll go out on a limb and say that as the weeks play out, as the next few weeks play out, we can make our way up into the mid 260s. This is a significant zone of midterm resistance that I'll say becomes a 2 to 3 week target or is attainable within 2 to 3 weeks of closing above 216.80. But honestly, as I said earlier in this video, I'm not really comfortable assuming the mid 260s unless we actually close Friday above 233.81, which is a long haul from here at this point in time. Bottom line, we remain on our heels into later November below 216.80, anticipating that 170s here. Where are we? This is it. Yeah, we remain on our heels on the defensive into later November below 216.80, still anticipating this 173.32 to 181.72 area over the next 2 to 3 weeks, and may actually be in reach this week if we settle today below 204.99. I think that pretty much covers it for today's Daily Tesla Report. Please click like and subscribe every time you watch the Daily Tesla Report. I do appreciate it. I forgot to mention that at the beginning, and also, I didn't mention the fact that you can see me now on camera. This is something I'll be doing now, I think, indefinitely for the foreseeable future. And that's really all I've got to say for Monday's Daily Tesla Report. I did record this, by the way, on Sunday morning. Have yet to comb my hair. Have a nice day.